Hey everyone, this is a trading review covering the dates between May 11th and May 24th, so weeks 20 and 21 of 2026. During the period across Binance and Bybit, the total P&L was minus 289.4 USDT with an average order size of 2,118 USDT. There were a total of 268 trades with 193 profits and 75 losses for a win-lose ratio of 2.57. Let's see what's been running on each exchange to arrive at this result. On Binance, two strategies were running, the Honey Badger and the unnamed Test to Live strategy. The P&L numbers include estimated adjustments for stop-loss squeezes beyond minus 100% of margin, as this more faithfully reflects the changes in balance. There were 5 such trades squeezed between minus 110 and minus 141% of margin, which gives a difference of about 120 USDT versus raw reports. So the adjusted P&L across both strategies was minus 198.1 USDT for an ROE of minus 13% at average order size of 2,446 USDT across 216 trades. The Honey Badger was the main source of losses during the period. The order size was capped at 9,000 USDT, while the average loss was way too high compared to the average profit. Even a real win-lose ratio of 3.6 was not nearly enough, as the break-even ratio required was more than 11. The conclusion is that now it's not the right market for this strategy. Test results show that it is not even a matter of distance. Here is a breakdown of tested coins across distances from 0.41 to 0.81, and all except one distance are in deep losses. About half of the coins never shot higher than 0.6, and those that did do not justify trading at 0.8 or above, as there were very few trades and they still resulted in a net loss. Most damage was done by these types of shots that, for all intents and purposes, have no rollback, no matter the distance. No type of risk management would seem to help here, and there's just nothing feasible to select for live at this time. During the period, it tested poorly, with an ROE of over minus 30%, versus live losing only 3.4%. The nameless shot strategy has the opposite problem. During the period, the test algos had an astonishing ROE of over plus 68%, or 80% when adjusted, while the seemingly best selections with best filters were only at plus 3.5% adjusted ROE. Test algos have no delta filters, no performance filters, and barely any blacklists. Yet somehow it evens out. The seemingly obvious thing to do is just to up the order on test algos and leave them alone. But in reality, it is not that simple. Here are the daily test results on 15 USDT orders over a wider period. The most it's ever lost in a day is minus 5.6 USDT. As an absolute number, who cares? There wasn't even a second thought. Now, let's imagine that the order size was real but modest, let's say 1500 USDT instead of just 15. Now the worst day looks more menacing, minus 565 USDT. At that point, the instinct would have been to scrap everything and start over, and especially so if you look at the cumulative results. Pretty much for an entire month, the cumulative was in the red, going as low as minus 738. Yet it got back up and stayed up until now. So, how low are you willing to go and still persevere without flinching? The jury is still out on that. All of that, of course, is a hypothetical rear-view mirror conjecture. Take it as you will. In total, the strategy's adjusted P&L was plus 46.6 USDT for an ROE of 3.5%. Let's do the same for Bybit. Here, only the nameless strategy was running on live, and only in first gear, so to say. The picture is similar to Binance. Live, with its P&L of minus 91 USDT, which equals minus 11.8% ROE, is not even close to the results of plus 53.6% ROE for test. The filtered selections made for live were performing worse by all measures. Lower takes, higher losses, lower win-lose ratio. Doing the same thought experiment would reveal that with Bybit, the swings are even larger. The worst day would have been at over minus 900 USDT, and cumulatively, it would have gone as low as almost minus 1400. Granted, the improvement may have been partially a result of the market turning a bit better, and also the refinement of chosen distances over time. But this improvement has yet to find its way into live. Now for some highlights. The worst coin award goes to Uni on Binance. Average profit of 6 USDT versus average loss of minus 111. A required break-even ratio of 18. No, thank you. The Good Boy Award this time goes to Trade on Binance. It gave the biggest single trade profit of recent times, plus 79.6 USDT. And that is much appreciated in a world where it is not uncommon to lose double that in a single trade. And the runner-up good boy is Eden. 12 modest profits averaging 10 USDT and no losses made it actually the top coin of the period. That level of consistency is worthy of applause. This concludes the review for weeks 20 and 21, 2026. Thanks for watching.